A back-to-back letter of credit, B2BLC, is a financial instrument used in international trade transactions where two separate LCs are issued to facilitate the sale of goods between a buyer and a seller. Here are 25 advantages of utilizing a back-to-back letter of credit. Mitigated risk. B2BLCs provide an additional layer of security by involving two separate LCs, reducing the risk for both buyer and seller. Flexibility. Buyers and sellers can negotiate terms that best suit their needs within the context of the two LCs. Intermediary role. The intermediary bank acts as a mediator, ensuring smoother transactions between parties. Confidentiality. The details of the original LC can be kept confidential from the second beneficiary, seller. Complex transactions. B2BLCs are useful for complex transactions involving multiple parties or intermediaries. Cross-border trade. B2BLCs facilitate cross-border trade by providing a trusted payment mechanism. Trade relationships. B2BLCs can help build and strengthen relationships between buyers and sellers. Quality control. The seller can ensure that goods meet specifications before shipping, avoiding disputes. Payment assurance. Sellers have the assurance of payment as long as terms and conditions are met. Alternative financing. B2BLCs can be used as collateral to secure financing from banks or other financial institutions. Legal protection. The use of LCs provides a legally binding agreement that safeguards both parties. Foreign exchange management. B2BLCs can help manage foreign exchange risk by stipulating currency conversion rates. Guaranteed payment. The issuing bank's commitment ensures the seller receives payment as agreed. Document handling. B2BLCs require strict compliance with specified documents, reducing the risk of disputes. Open market transactions. Buyers can source goods from multiple sellers using B2BLCs. Less downside risk. Sellers are assured of payment, even if the first buyer defaults, reducing the downside risk. Limited liability. B2BLCs can limit the liability of parties in case of disputes or unexpected events. International currencies. B2BLCs facilitate transactions in various international currencies. Cash flow management. Sellers can better manage their cash flow by knowing they will receive payment. Guaranteed dispatch. Buyers can rest assured that goods will be dispatched as agreed upon in the transaction. Legal framework. B2BLCs operate within a well-defined legal framework governed by international rules and standards. Trust building. B2BLCs build trust between parties by ensuring mutual commitment. Competitive advantage. Businesses using B2BLCs can gain a competitive edge in international trade. Risk sharing. Both buyers and sellers share the risk associated with the transaction. Compliance assurance. B2BLCs ensure compliance with agreed terms, reducing the likelihood of misunderstandings.